Run us through the sense you're making of the kind of activity we're seeing at the bourse at the moment, where local investors each day seem to be dominating now.
Thank you very much, Alishia, and I'm really glad to be here. Basically, as you observed, we are seeing a lot of bullish trend in the market, and a lot of local activity. Foreigners have been fairly subdued in terms of participation in the market at the moment, and we are seeing a lot of demand, especially of the agricultural stocks, which seems to be at the forefront in terms of pushing the market upward.
Well, results releases keeping things busy as well. And I want to take a look at two players specifically in the same space that recently released numbers. We had Housing Finance posting a 73% jump in pre-tax profit earlier this week. The market clearly impressed with that. The company citing a rise in lending and a fall in costs as the main reason. What was your overall impression of those results?
Well, housing finance has been one of the counters which a lot of investors have been counting on significantly, mainly because of the segment of the market that it seems to concentrate on, that is the mortgage industry. And housing has been one of the factors which has been a major contributor in terms of where you're looking at the economy. And basically because of that, housing finance is one of the stocks which most of the investors are really very bullish about and very hopeful that's going to continue performing well, and definitely did not let investors down in terms of the dividend payout as well as the profit performance.
Now, this is against a company like SNL, the mortgage division of KCB, which reported a profit before tax of 118%. The change in strategy really seems to be paying off for that company as well. So how do the two compare at this stage in your books?
Well, definitely that's a good comparison, looking at SNL as well as housing finance. Well, housing finance basically has fairly been in the industry slightly longer in terms of being very in terms of focus, but basically SNL, we have been seeing a lot of changes in terms of how it's been performing. Like for instance, Kenya Commercial Bank recently merged it in terms of the product offering, in terms of how it enjoys, and also looking at its backing in terms of capital base. Definitely SNL looks a bit more well positioned. Housing finance is still looking at capital, or even looking at raising more funds so that they can be able to lend a bit more, and also looking at their policy, especially over the recent past. They've not been a very good dividend payer, so a lot of investors are still fairly concerned about it.
Well, housing finance, as you say, planning to raise long-term capital to allow it to expand its mortgage business and address the current mismatch exposure between short-term deposits and the long-term lending associated with the provision of mortgage facilities. That's one of the news headlines that's running in the country today. Well, it's all good, of course, on both fronts, as you say. SNL positive, housing finance positive as well. But one has got to ask the question, what about non-performing loans? I mean, how are the level of how is the level of lending being managed to mitigate against the very real risk at the moment of non-performing loans and possible provisioning moving forward?
Thank you very much, Alishia. That has been one of the major concerns in terms of our financial markets, especially the banking stocks, looking at what has been happening globally in terms of the credit situation. But locally, we've been seeing a lot of our banks being very conservative, especially over the last 1 year. Though right now we are seeing a bit of lending in terms of the retail market, but mainly they have been a bit concerned, and the default rate has been fairly managed to a significant extent. And as per the mortgage sector of the market, the security this market seems to be enjoying is the fact that we are still having a bit of a problem in terms of the housing, in terms of the Kenyan market, and until we see more players coming in, some of these people who have already strategically positioned themselves, they are fairly safe, because the security they seem to be able to derive from is the property that they seem to be lending towards, and because of that and the kind of market they are looking at, they are able to be fairly cushioned in terms of default. And so because of that, we are seeing a bit of promising growth, especially in terms of that segment of the market.
Well, talking about strategy and new players coming into the market more aggressively, competition is certainly heightening. I mean, we saw Stanbic Bank lower its minimum lending amount for houses to middle income earners to 3 million shillings from 5 million shillings, as the potential in this market is still largely untapped. So what's your outlook for the space as a whole and the investment merit it holds moving forward, Samuel?
Thank you very much, Alishia. Yes, we are seeing a bit of a shift, especially in terms of the banking front, looking at the mortgage segment of the market. But at the moment, we are seeing also the government is chipping in terms of low-cost housing. We're also seeing a lot of slum upgrade projects being run by World Bank, as well as some other institutions from around the globe. And so because of that, it's a bit of a concern. And it looks like it's a bubble which might be bursting in the near future. So definitely that calls for a bit of a concern in terms of how some of these banks are able to expand, especially into that front, and the competition definitely is going to be a big concern. So how they position themselves, as well as take advantage of the market, and being able to at least take advantage of the situation as it is, will be able to really boost their performance.